So today I'm going to talk about a losing trade. I know a lot of YouTubers, so-called gurus out there, love to talk about their winning trades. I want you guys to learn from my mistake so you don't repeat the same mistake. So for example, and this also reflects on myself, once I say and understand that I made a mistake and it repetitively repeat it consistently to myself through a video form or into a writing form, it helps me out. So I hope this helps you out also. Let's get right into it. So I called one of these trades out right here, for example, AUDUSD, and you can see the Aussie pair was very bullish and has been since, I would say, probably the beginning of November. Very bullish. This should have been the first sign, do not short it. But I went very slightly against my, I would say, strategy. I have two different strategies. My main strategy for a longer term hold in a position is going to be this one that I'm going to talk about, that I made a mistake in not understanding that I should have not reacted to the shorting position on AUDUSD. So I seen this huge volume kick into this supply zone. This supply zone has been drawn back for me all the way back. I can't remember when, but it was probably, I would say, almost 2 years ago. You can see it. So yeah, 2 years ago, I'm drawing a zone. And I know when that happens, sometimes you try to time it right, and I'm like 90%, a little less, I would say about 88% sure that AUDUSD is going to have a short position coming up soon, and it's going to be a strong one because of the fact that we are reaching zones that have been 2 years coming. So not saying anything, not trying to call anybody anything out. I'm just saying in general. I thought I could catch it right here, but I made the mistake. I went against my strategy, and this is why we should learn from my mistake. So when I seen this reaction right here, and both of these candles, this right here at 8 a.m., you can see it right here. Look at this high volume. We can go back to 8 a.m. You can see it right here, very high. Let's go back again, also very high. This candle is above both days that how I trade my strategy. One mistake that I made was I entered before I got the next 1 hour reaction. Big mistake, and I got taken out with a stop loss. The issue with this is that I took the trade before this candle closed. So what you could see is this huge volume coming in. This right here is buying volume while at the same time taking out short positions. That's what happens. They buy up, people will short here, they take them out for a stop loss, bring it back down, bring shorters to come back in again, bring bears to come back in again, and they push it right back up, take them out, and it continues. So as soon as I enter the trade right here, my problem is the fact that I did not wait for this candle right here to react bearish. If this candle would act bearish, and especially closed back into this level right here, would say this would have been almost a exact strategy for me to enter the trade, confirmation on all levels. My issue is that I entered the trade way too early. So let's look at it. Look what happened right here. We had this reaction push up. You had this no demand right here. I entered right here, and again entered it right here on this confirmation candle right here for a close. This no demand, entered right here, stop loss above here for both of the trades, and we got pushed up, knocked out, and continued. Again, if we would have had a reaction that continued down or even went back up, tested this level right here, pushed back down, I'm almost 100% that you have a continuation to the downside. But I entered too early, and that is exactly what happened to me. That's why I always say wait for the reaction, and that is your best bet to enter a strategy that almost will undoubtedly help you to understand why volume bars work so well. Volume bars are designed more or say less to show liquidity in the market, action that is happening in the market. Price action for me is tick action. So when we have this kind of type of tick action that is happening, of course, that everybody who goes against people that trade with volume bars is the fact that their best argument is, I have nothing against it, but their best argument is the fact that it's not real volume on spot Forex. That is 100% true, but the thing is nobody's claiming it. This is tick action. This is how much times the shorting and how much times the long positions are getting hit. So again, I have nothing against people's opinions in the market, because without opinions in this market, it would cease to exist in any market, be it the stock market, be it futures market, any market out there. Without opinions, you would have no market. Nothing would be worth it at all, because everybody would do the exact same thing. So again, this is my strategy. I made the mistake. Please learn from it, and I hope I will reflect also on it. Please share so other people can learn from it. Like this video, and peace out.